Hey everyone, how's it going? Great to see you guys. Hope you had a great Monday so far. Well, just to remind everyone, if you're not already part of my free Telegram channel, please do join. There is plenty of great information in there. Plus, you'll see when I'm on other shows. We just started another show, the Gamma Report with Chris, and it was a great start we had today. And I hope to see more of you guys there. So. One other thing, if you see anyone asking you for crypto, asking you to invest your money for you, it is a scam. I don't do any of that stuff. Just be very careful. There are people who are using AI with my likeness, with my voice, with my face, claiming that I'll invest your money or asking you to give me crypto to invest or do whatever for you guys. That is not me. Just be very aware and very careful of that. Okay. So today, so far in the market, we didn't really move that much. We did go a little higher, but mostly just chopped sideways. And speaking of the Telegram channel, I did give you some gamma levels this morning. The gamma levels were suggesting mostly a choppy day. And in the morning, we had a chop day. I said that we were range bound chop day, although the puts were in control early in the morning. And then that did shift to be concentrated in the 671, 672 area with a 672, just a tiny bit more than 671 in the SPY. And we ended at 671.61. So it was a really good level today. The gamma, if you're not familiar with it, it just helps us see where the market is positioned, where it's likely to move, where market makers need to hedge themselves and will either participate or dampen any moves, where the market levels might pin. And they're right, quite often, quite a large amount of the time, and it's pretty impressive just how important and how influential those gamma levels are. So they're important things to watch throughout the week. Today, I wanted to go over quickly what we might be seeing over the week ahead. We wanted to finish up the small portfolio construction. And then if I have time, I will answer some questions that people had. Let's see. Hey, Tim, good to see you. Hey, Dan. All right. So I don't entirely remember exactly where we left off on the small portfolio construction. Maybe you guys can remind me if you guys remember, or like what were the last one or two things that we talked about. If not, I'm sure we'll find our way. But maybe if you guys if you guys type that into me, I'll go into some of the overall things ahead in the market, and then we'll go back to that. Okay, so let's take a quick look at bonds, see what they're doing. We see this little bit of a breakdown in bonds. That means that implies higher interest rates over the near term or longer term interest rates in the near term time period. So that is not great. Should be a downward pressure, or at least a cap on how far stocks can move up in the short term. The other thing that we're seeing here is that VIX. The VIX is a little elevated. We did move higher today and the last few days, and we keep making all-time highs, but you can see these lows are not coming back down. We have a little bit of an uptrend up here, and it's just getting a little uncomfortable, the fact that we can't come back down to these normal levels, and we are in a bit of a higher volatility regime right now. There was a period of time where we were sub 15 earlier this last year, and then earlier this year we were in this 15 to 16 range, and then that's pretty much defined the bottom of this year, except for this short period of time in August to September, where for several days out of that time period we did come below the 15 level. But since we're in this kind of 15 to 20 volatility regime, we just want to be careful, because spikes above 20 can mean sharp pullbacks, especially if they go well above 20, if they go in the 30 or 40 or 60 region. So we just want to be careful of that. We just want to be aware. We don't. That's what we were talking about in the portfolio construction. We want to be bullish, but we don't want to be crazy, crazy, crazy bullish right now. There's just some risk in the markets. And earlier today, Chris Pulver and I were talking about how it seems like the everything melt up. We've got SPY touching all-time highs. We've got QQQ hitting all-time highs. We've got IWM getting, well, now, yeah, we are not all-time highs at IWM. We had the Dow, all-time highs at the Dow. We have gold hitting all-time highs. We have silver hitting all-time highs. We have Bitcoin pretty close to all-time highs. So it just seems like everything is just going up and up. And actually, yeah, Bitcoin today, all-time highs. So it is tough. It's tough to think that absolutely everything is becoming so correlated and it's all to the upside. And generally, that is not sustainable. Number one, we don't see that very often. If they correlate, it's usually in downside moves, like flash crashes, like COVID, like Liberation Day. So to have this happening on the upside, well, we don't see that. And if if a high correlation means that there's a temporary sharp disruption in the normal flow of things. And so if we take it to mean that, then what we should expect is that the correlations decouple relatively quickly. Just like in COVID, they were highly correlated for several days, and then they started to decouple. And yes, things kept on going down, but not at nearly at the same rate. You did have sectors that did better than the others. Same with Liberation Day. Everything correlated for a few days, and then they started to lose their correlation. So our expectation should be that all these assets that are all moving in the same direction, they should start to decouple fairly quickly, fairly soon. So which ones stay strong and which ones weaken, or which ones stay much stronger than the other ones, that is something that we want to be aware of and something to try to decode when we're looking at all of this. I don't think that happens this week though, so right now, today is a little premature to try to pick that apart and say, well, if these things decorrelate, which ones are the ones that are going to underperform and which ones are the ones who are going to outperform. So we'll probably save that for tomorrow or Wednesday if we get a clearer picture. Let's see. Happy Monday, Kevin. Hey, James. Are the gamma levels you post in Telegram for daily expression? Yes, those are 0 DTE gamma levels. We're talking about flattening the equity curve for smaller accounts holding at least one. Okay, great. Thank you, TP. Thank you. Hey, Kay. Good to see you. Okay, so we just want to make sure that we're aware of that. We don't get over enthusiastic. And when we talked about the portfolio construction, we did talk about this scale right here and how I personally am bullish, but not yet strongly bullish. What would make me strongly bullish is if we get a pullback in the S&P 500 back to the EMA 20 again. If we get that same thing that happened here, that happened here, that happened here, that happened here. If that happens, then I will be strongly bullish temporarily. And then when we go back up, I'll just be bullish again. Okay. So we just want to be careful and acknowledge where we are in that market cycle, or in this uptrend cycle, I should say. Okay. So let's continue. So thank you for the reminder, TP. Hi, Kirk. Good to see you. So we wanted to get our equity curves smoother. So if I have in my portfolio, let's talk about a single strategy portfolio first. So there's a couple ways that we can construct this, and can handle all of our money allocation. One way is one portfolio per strategy. Okay. And so each portfolio I can have 5 longs or 5 shorts and how I would handle this is you would, for example, one account is for income, okay, and then one account maybe for directional trades or single options, maybe one account for verticals or other types of spreads. And you can split it up by the way that you express your viewpoint. So basically, when we're talking about that trading plan, the third step was the execution. So depending on how I execute my trades, you can split it up your accounts that way. Another way of doing it would just simply be actually I should have said this one by execution. Okay. And then or each portfolio okay, that'd be the better wording for it. Each account by strategy. For example, if you have my QuantX, you have an account for QuantX. You have an account for Weekend Trading Club. You have an account for morning payouts. You have an account for Gamma Pockets. You have an account for Gamma trades that you find on your own on the GEX trading terminal. And you have an account that you find on your own using Maverick. Okay, you could split it out that way. And then if you don't want so many splits, you could put these in the same account since they are operating off the same edge. Both Gamma Pockets and the GEX trading terminal, at least in the basic scanner that you get on the basic level, those both operate on looking for where the market maker might be hedged and push the underlying, or might be forced to hedge and push the underlying in one direction or the other. It's the exact same edge. And then Maverick, you can't 100% say that this operates on the, I'm sorry. You can say, actually, both of these do operate on the market maker's future projections. Now, Maverick and QuantX are not 100% the same. They operate off, QuantX does more calculations and more predictions than Maverick does, but they operate off that same edge. We're taking the future projections of the market maker and taking advantage of their viewpoint and trading directionally in that. Okay, so you can do it by strategy, and if you have other people's programs, then just keep separating them out that way. Now, most people, though, I don't think they have enough accounts or enough money to actually do that. It'd be difficult. So, okay, I'm going to put $5,000 here and $5,000 here and $5,000 here and $5,000 here. I'm going to need $20,000 initially and to open up 4 accounts. Most people aren't starting out that way or necessarily even want to do it that way. So then you're just single account, and then you have to carefully manage your positions. So this is what I'm going to focus on, because that's what I assume most of you are in that boat. And if you're not, let me know. So that way I can speak to something else that would be more relevant. But I'm pretty sure by far the majority of people will be in this category. Okay. So let's see what you guys are saying so far. Hi, Kane, and all for your info. Entered Friday's weekend profit trade, not today's, updated. Oh, really? You got it? You were able to get in at the price we're looking for on Friday? That's great. Hey, Rob, good to see you. Okay, so if this is the case, so we're back to talking about this $5,000 and we're allocating maybe max $500. Okay. And recognizing that this is a fairly large allocation. We're taking quite a bit of risk with each position because we're risking 10% of our account on each position. But that is the position that we're forced into because we have a small account. And remember what I said earlier, the 2 lessons ago, where since we're in this position and since we're being forced to take an outsized allocation, at least according to modern portfolio theory, then we want to only pick our very, very, very best positions. We want to love and be excited about the positions that we own or that we're about to take. Okay. So if at any point you take a look at your positions and you go, ooh, this thing's just not working out, then you should be getting rid of them, which means that in your plan, in your trading plan, which we talked about 5 or 6 lessons ago, then that is part of your trade idea, is that it's going to move at a certain pace in a certain direction. And if that lines up, great. You're going to be super excited. You're going to be happy with it. And if it doesn't, then you're going to be kind of disappointed. And that's why we have that time, the time stop as part of our trading plan. It's because that will help you gauge how much you love or don't love the position. It's not, oh, I'm down 10%. I don't love this position. Okay, don't use that as your gauge. Okay, just say, hey, it is not meeting my expectation in my time frame. You know, it can go down. We have to recognize that the stock that we pick isn't going to go just up, and it could go a little bit down before it goes up. But as long as it doesn't hit our stops, then we should be okay with it. So this is a good time to take a look at. Oh no, we didn't do that. I'm sorry. Well, I'll show you. It was a bonus trade that I gave my GX trading terminal members at a masterclass last Friday. That was Altria, okay? And you see what we did was we took 2 gamma pockets. We said this is support, this is resistance, and the larger, more powerful gamma pocket and in the direction of the trend was this higher one at 67.5. And so we chose to target that. And we came up with a 1.5 to 1 reward risk ratio trade. And today it went down. And it dipped below our zone, our stop loss zone, but it closed within it. And it closed, looks like, oh yeah, for sure, above the MA50, excuse me, above an important support level. So some people might take a look at this trade and go, I don't love it. It didn't go straight up to my target. Oh, I'm have a certain percentage loss right here. Let me see. Oh, it's down 14%. Oh, I don't love it. That is not, that's not what I'm talking about here. If it is within your plan, then you're fine. Okay. And this was, looks like I should have done this. Okay. So if it's within your plan, you're fine. You should still like the trade. Just because it went down first before going up doesn't mean you should hate the trade and get rid of it. It's within your plan. Okay? Maybe you're not as excited as you were at the very beginning, but it's fine. Everything is working out. If tomorrow it closes below, then, okay, we don't love the trade anymore. It broke the parameters of our trade and that we should be out. If it just kind of fuddles around and goes sideways all the way until Friday, we would say, okay, even if that gamma pocket is still there, we would go, oh, well, I'm not as excited anymore because it just chopped sideways for a couple of weeks, and I was really expecting it to hit that gamma pocket within that time frame. And so even though that gamma pocket's still there, and you go, okay, well, it's consolidated already, aren't chances better that it'll hit the gamma pocket in the next 2 weeks? Yeah, maybe, but I'm just not that excited anymore because it already took too long. There's probably, rather than risk the chance of it still consolidating, maybe there's a better opportunity where I can take my money where it will go up, not necessarily right away, but almost right away or much quicker. Sort of like the trade in what am I blanking on? Why am I blanking on this trade? So unusual. I'm blanking on it. There's a trade where we hit 60% overnight. Okay, so then I'd be say, well, maybe there's a better chance because this is consolidating still. Okay? There's a better chance somewhere else where overnight maybe I can hit my target. Okay, so that's what I mean when I say, like, if don't get excited or unexcited just because of your P&L. Just if it's still within my plan, I'm still excited about this opportunity. Okay. Make sense? Let's see. I'm in that boat. I'm not sure at what point you type that TP, but love where you're going with this discussion. Oh, good, Stephen. Hi, John, good to see you. Hi, Hopium, great to see you too. Okay, so when we go into our positions, let's pretend that we're building. Let's do a paper account with $5,000, okay? Although I'm not sure exactly how we're going to trade this or track this, because we could always track it by hand. It'd be nice if we had, let me see. Can I get maybe a Thinkorswim paper account? It's not going to give me exactly $5,000 though. So we're still going to have to mentally know where we go up and down or track the progress of it. And I'm not going to be able to put all trades in. Does anyone know of a paper trading platform where I can define the starting balance? What just happened there? No. Thinkorswim paper account. So when I'm talking about my stop losses on a swing trade, I'm also always talking out at close. So today I didn't get stopped out on this trade because it was nowhere near the stop loss at close. It was way up here. Okay, if 5 or 10 or minutes before the closing bell we were right there, then I'd be watching it very carefully. And then if it was below that stop loss level, then I would have stopped out. You can edit the starting account in TOS. I didn't know that. It's good to know. Thank you. Maybe you can tell me how to do it too once I get a paper account logged in. Okay. So how do we edit this? Hey James, it will have an option for you. So Set you're starting out on a Thinkorswim pair, go to the Monitor tab, click on Activity and Positions, right-click on the main account line and select Option. Main account line. I don't see the main account line. I go over here. Go to the app fonts, right click on the main account line. Select adjust. I'm not seeing it, man. All right, well, maybe I'll do a quick Google search. If I can't find it, then maybe we'll start this tomorrow. Okay. Thinkorswim, paper trade, adjust balance. Position statement. Locate adjust account in the top right corner. Yeah, I don't see it. I don't see it. Activity and positions. Or account position statements. Yeah, I don't see it, guys. I don't see it. Maybe I'm blind, but I don't see it. I'll have to figure out. I think that's if you already did a paper trade, then you would be able to adjust that trade. That's what it sounds like, but I'm really not seeing it. Okay. I'll figure it out. I'll figure it out overnight. So we won't start that till tomorrow. Okay, so we'll talk theoretically for now. Okay. So let's just say we now are in, what happened to my scale? How come my scale disappeared? How did that happen? All right, well, imagine we still had the scale here. And right now I am bullish, but right now, if I'm going to start a paper account right now, I'm all in cash. If I'm just a newbie and I just started trading, I just funded my account, I'm all in cash. So that doesn't mean I run out and I just buy 2 bullish positions. And it doesn't mean that I run out and I buy 5 bullish positions and three shorts, because then I'll get correlation on timing of market correlation, if not any correlation between the positions, meaning that the SPY is right here and I bought all my bullish positions right here, which doesn't seem like a great idea given that we're kind of high, kind of far away from EMA 20, EMA 50, okay? So what I want to do is maybe I have 1 position on right now, and then I wait a little bit of time for that second position, maybe more for a pullback. Or I'd say, okay, well, one of my positions is going to be a breakout, the other position is going to be a pullback. And so I can look for a pullback opportunity today, and maybe a breakout opportunity, maybe I'll look for a pullback opportunity now, and maybe a little bit later I'll look for that breakout opportunity, and those will be my 2 longs. Or if I really find a bunch that I like before and I find a good short to balance it out with, then later on this week or next week I can put on my 3rd position, assuming that the 2 positions that I'm already in did not already hit a stop loss or a target, in which case then I'm free again, because then I would only have one I would only be a 1 on the scale instead of 2 again. Also, what I told you guys a little bit earlier is that if we pull back to that EMA 20, I'm going to be a 3 on that scale once more. So I could add it in a couple more that time, or again, space it out a little bit. That's when I'm first starting out. Later on, when I have positions that come off because of stop losses or because of targets being hit, that automatically makes my portfolio something other than what I want it to be. Right? If I want it to be a 2 and one of them comes off, then I'm only at a 1. I'm going to have to type those back in later today. Then I'm back at a 1, and then if I want to keep my portfolio at a 2, then I should be looking for an opportunity on that day. So there's really no need for me to look at new stocks to go into every single day. I only look for new stocks to go into when I have room in my portfolio. I want to be a 2, it's at a 1. I want to be at a 2, it's at a 0. Then I'm looking for opportunities actively. Otherwise, I'm just monitoring everything, and I'm making sure that the baseline assumptions in my trade idea, if we go back to the trade idea lessons, that none of them are being violated. Because if they're being violated, then what that means is all of the trades that I put on while I was bullish, then those all got violated. I should be going to neutral. I should be going down to 0. So my example of that was when I shared with you guys during COVID. My portfolios, I was long, I was bullish. There's no reason for me not to be bullish. Okay. So we're long, we bounce off the MA50, we pull back to the EMA 20, and I'm looking for a confirmation bar for a bounce off of the EMA 20. Okay. At this point in time, I'm pretty bullish. Right? Did I say earlier about our situation right now? If we pull back to the EMA 20, and this was what I saw leading up to it, I'm going to be strongly bullish. I'm going to be a 3 on the scale if we get the bounce. I'm going to be a 2 if going into that bounce, but I'm getting ready to be a 3. If I get that green candle and I close above this day's high, then I'm going to be a 3. So I'm a 2 getting ready to be a 3 right here. And then the next day, boom, gap down below the MA50. Uh-oh. All the trades I have on right now were assuming the whole reason why I was bullish and my portfolio was leaning bullish was the baseline assumption that we're in a bullish trend and that we continue to bounce off of the EMA 20 and MA 50. We broke one of those assumptions right there. And at that gap down open of this session, I closed every single one of my longs. Okay, I still had a couple shorts because I was operating a long short portfolio. And I didn't only have 2 longs, right? I had some shorts. So I don't know the exact mix. Okay. And I wasn't limiting myself to 5 longs and 5 shorts. I had larger accounts, so I had more allocations. But the point is, all my loans got closed right here. And yeah, I lost money on every single one of my longs. I made some money on my shorts, but it was a net down day for me. Okay. And then I start putting some volatility hedges on. But even if I didn't, then my shorts the next day, boom. Okay, now I've gotten a large amount of profits from my shorts, And I'm asking myself, how short do I want to be? Because in just 2 days, actually just in the first day, my portfolio went from a +2 on the scale, okay, to something at least a -3. Okay. Again, I don't remember the exact composition, but it was at least a -3. Why? Because it was a 2. And let's just say it was 5 longs and 3 shorts. That made me a 2. If I got rid of all 5 of my longs, then I would be 0 longs and 2 shorts. That's a -2. I'm sorry, -3. 3 shorts because I was a 2 before. Okay. If I was a 4, then I had a -2 on. And then again, I take all my longs off, I'm at a -2. Okay. So it was at least at a -2. I don't know if I said 2 or 3 earlier, but I was at least a -2 when this happened. Okay. Then I've got to ask myself, do I want to be bearish, or do I want to be strongly bearish? How bearish do I want to be at this moment in time? During COVID, those initial times during COVID, we had no idea what was going on. And we were told that we're going to shut down for 2 weeks. Okay. So at that point in time, we have a timeline. We have an idea. Oh, we're going to shut down for 2 weeks. That is not good. But at this point in time, I am uncertain. And so I don't want to be completely bearish, but I'm still leaning bearish. And so I move myself to a -1 instead of a -2 or -3 or wherever it was. Okay. Then we continue. Okay. It continued to go down. That's fine. Boom. Gap down below the MA200. I am in full bear mode right now. Okay. I made some money on these shorts right here. I made some money on some VIX calls. Now we're in full bear mode. I lost money over here on my longs. These 2 days made up for it, and then some. And then this gap down really made me some money, even though I took off some shorts over here. But right here is where, okay, I'm at least a -3. At least a -3. And then we get that. Should I still be a -3? Yeah. Okay, we recover some. We close above the MA200. But for me to change my mind about this bear, I'm going to need 2 days of confirmation. I need lows, 2 bars with lows above the MA200 before I completely change my mind. Okay, so I might move myself from that -3 to a -2 at this point. Oh, look at that. Failed breakout so far. This could just be high volatility chop sideways. I don't know yet. So I'm going to maintain my -2. Okay, pop right back up. Again, that's volatility. Maintain my -2, right back down, maintain my -2. I recognize now that there is huge volatility going on in the markets. So I can't let the emotions sweep me away. I can't let these huge moves up and huge moves down deter me from my positions and my overall trading plan. Okay, so that these large bars by themselves do not constitute a break in my baseline assumptions, because at this point in time, my baseline of assumptions is things are going to be very volatile for a while. I recognize that we completely switched volatility regimes. Let's maintain if I go to VIX. Yeah, okay. we're still in huge volatility at this point during COVID, in the 30s and the 40s, okay? So that's part of my baseline assumptions. Guess what? If this suddenly moves down to the 15 to 20 or below region, that shifts my baseline assumptions. I need to go back to neutral and reset myself again. But that's not what happened, okay? So we stayed up here, and then we move forward, gap down again. Good thing I'm short, -2 short. Here, I don't know. This is a large amount of volatility. It's hard for me to make that determination of whether I should still be a -2 or I should be a -3 at this point in time. But what I will do is I will start to make a plan now. If we come back to that MA200, I am going to be a -3. Okay? Maybe a -4. Boom. Went way lower. Okay, at least I'm a -2. Over here, I have no idea where this bottom is going to be. I don't know if that's going to bounce up, back up or not. And so at this point, I'm like with the news, with the volatility, with the gap down, even though this seems overstretched, if you remember the situation that we were in COVID, this is a good reason for me to go bearish, okay? Because this would be a breakdown, okay? What I mentioned to you before is if it goes up to a -200, then I would be comfortable because that was a pullback, and then we would go. What we got instead was a break, a gap and a break. And so that was also a reason to go full bearish, -3. Okay, come back up, go right back down. It's volatile. Boom, okay. Another huge move downwards, okay. Maintain until I see a pause or change of trend, okay? And remember, because of the huge volatility, the pause or change of trend might not look like this, okay? It might not be a nice little smooth transition. It could be very gappy, and I recognize that. And that's why I'm not going a -4 or -5, because the volatility is so huge right now that a single day could move me in a certain direction. Comes right back. So this is basically came close to revisiting the EMA 8, came close to revisiting the EMA 8. This trend is still in place. We're down again, okay? Go back up, go back down. This is the first sideways day I've seen through this entire sequence. I guess these 2 days, okay? But since this drop right here, that's the first sideways day. So I may consider at this point that maybe I should just be a -2. What if, Kane, none of your positions hit your stop loss or your target, but you think that you should move from a -3 to a -2? That overrides my trades. My plan for my portfolio overrides my plan for my trades, because my trades were put into place based on what I wanted my portfolio to look like. So even though none of my trades, assuming none of my trades hit their planned target or their planned stop loss, my change in the balance that I want in my portfolio constitutes a change in the assumptions that I put my trades on for. So what I do at this point, well, it's not like I need to blow out all my trades just because I went from a -3 to a -2. What I do though is I do need to get rid of one of my shorts, or two of my shorts and one of my longs if I wouldn't have had any longs at this point though. Okay, so basically I need to get rid of one of my shorts. Which one do I get rid of? The one that's performing the least or is nearest to its profit target already. And then we just take that one. Okay, so we're at a -2 right here. continues to move downwards, that's okay. I can maintain -2. This has been quite a move right here. And just because of one day's movement, I'm not going to change my mind about portfolio. And really, this is sort of just like this is just match this low right here. So it within the range, the context of these bars, 3 bars right here, that's still sideways movement. Okay, now we continue downwards. That's okay, still at -2. Pull back to the EMA 8. Oh, do I consider maybe I can go to a -3 now because that's a pullback? Right? Let's see. Should we widen our range when volatility is higher? Absolutely. The way that I've been showing you guys was that my stops, I should be aware of the ATR, right? So generally, not always, but generally, I want my stop to be at least 1 ATR away. That way I don't get stopped out by randomness. Okay, so let's see how that would have looked. We're on March 24th right here. Let's start over here and we go back to where this all started. Okay, back at COVID. Okay, so here, the day before, okay, so ATR is still low over here. It's a 4 ATR. This the first day it gapped down. This would have gone through my stops. Okay? If I put another long here, it would have been at least 4 away. But if I put on a short here, then it would have been 4 points to the upside, which would have been almost exactly the MA50. Okay, assuming you were trading just the SPY. Okay, so let's see at a point where we think we might have violated. Okay, that right there. Okay, this one, if I put on a short right here, would this have stopped me out? Well, right here, this is 7.5. Okay. So this one, it moved up 12.8. So yeah, I would have gotten stopped out. And so the volatility increasing, the ATR increasing, it's increasing also, but the ATR becomes less reliable because volatility is expanding so fast. And so therefore, during times of extreme volatility, I actually abandon all stop losses. I don't use my stop loss. I don't use a stop loss. I use my discretion. Okay, because it's tough. You'll get, the more volatile things are, the more your stops will get hit, and then it'll just reverse the other in the other direction. So you need to. That's why the context of the market is always first. It's not just your trade. It's not just your stop loss. Okay, so during extreme volatility, I do, number one, your stops should be moving out anyways just because of the ATR. But yes, when things are really volatile, I abandon my stop losses. Good question. Okay, so here I need to consider, do I go back to -3 or do I stay at a -2? If I'm conservative, I would stay at a -2. And if I'm really pessimistic about what's going on during COVID, then I would be a -3, okay? At this point in time, just based on what I see right here and kind of what I remember from this situation in COVID, I would probably go -3 over here. Okay. But I'm a bigger risk taker. I have more time and trades under my belt that gives me confidence that in order to take heavier risk. If you were less confident, then you would just No, then you would just keep it at a -2. All right. So basically, when we're super volatile like this, what I would look for is an extreme candle. All these candles are pretty much the same size ever since this drop right here. All these candles are pretty close to the same size as each other. I want to look for an extreme candle. And the volume is, you can see it suddenly spiked up over here. Okay, so that goes up. Okay, a -3, that hurts me a little bit, but I want to see what happens at that EMA 20. Goes back down. That makes me very comfortable about my -3 decision. If I was -2 here, then I could have gone -3 over here. And then that would have taken advantage of that right there. Okay, now we close above the EMA 20. That is a reason for me to go to -2 or -1. Okay, we continue upwards. Okay, for sure now I'm at -1 because that's a confirmed break. It closed above the EMA 20. The next one opened and closed above the EMA 20. It's just that this closes a little bit below the high. But in any case, I would take that as confirmation and be a -1 right now. Okay, if we hit that 50, then I want to see what this does. Okay. I'm definitely not going to be bullish because we're over here at that MA 200, but I'm considering if I want to be neutral or if I want to maintain my -1. Okay, and then that makes me a little bit more comfortable with my -1, but if that breaks below the EMA 20 and I confirm, I might go back to -2. Okay. Didn't happen. Okay, we went above. Now I'm a lot more neutral until, so I could, over here, it doesn't, I can be 1 or -1 or 0 up until that MA 200. Okay, so I'm still -1 over here. And we're just chopping sideways, right? So we're not going down anymore. Okay, we hit close to that MA 200. Okay, right there. We opened above it, closed below the MA 200. Close above. And now I'm neutral. I'm completely neutral. Why? Because I've got not 2 days in a row yet where the low is above the MA 200. And we're just kind of chopping across that MA 200. And I don't know, this was a flash recovery. So I don't know what's going on over here. So I'm neutral. Okay, I'm very neutral in the market right now. What I do also see is that volatility, realized volatility is smaller than what we had over here. So I want to switch over to VIX. Okay, and VIX is still elevated, it's still 26. It's not in the 15 to 20 region. It's not way up here, but it's 26. Okay, so the flavor of my neutrality is probably going to be a same number of longs and same number of shorts to get me to that 0. Why? Because volatility is still elevated and it could still move quite quickly. And so that sharp movement, yes, I'll lose on one side, but I'll probably make more money on the side that that takes advantage of the proper direction than I would lose on the other side. It's better than, at least from a portfolio management perspective, it's better than just sitting in cash. Right? If you're not that confident in picking your longs and shorts, or you're not that confident in your management, then you would just be all in cash. Okay? So you see, now that's long. This is now a change of trend. Okay, my MA 50 is moving up, my EMA 20 is moving up, my EMA 8 is moving up, my MA 200 is mostly flat, but if I look very carefully, it is also moving up. Okay. So I'm long. I'm getting ready to be long here. I should be long. My portfolio is at a 0. I would like for it to be at a 1, but it's not great timing, at least from just looking at the SPY. It's not great timing. There may have been individual stocks where the timing was okay. So I'd either be at a 0. I would want my portfolio at a 1, but I'm okay maintaining 0 for a while and just waiting for this to pull back. Hopefully to the MA200, but even if to that EMA8 is okay. Okay, go higher. Okay, too bad. Or if I got into a long, great. But if not, I'm just waiting. Okay, this is very, very volatile. Okay, and it keeps going higher. Boom. Okay, right back to the MA200. Okay, and now I'm super glad that I didn't go full on bull, right? Just because we got that change of trend, I didn't go +2, +3. Right? If I found a good opportunity, then I was at a 1. Otherwise, I was still at a 0. And then I get this, and now I'm looking for either a bounce or a break. So I'm neutral. I don't know which way it's going to go, but if it bounces, I'll go bullish. If it breaks, I'll go bearish. Okay, so I'll go 1 or 1, -1 or 1. Okay, it bounces, not the best, most beautiful bounce right there, but it is up. I would either be a 0 or 1 at this point in time. We did close below the EMA 20 still, so I'd probably be more of a 0. Okay, same thing. It goes down and then it closes back up. Still kind of in the danger zone. Neither of these are confirmation bars, so I'd still be at a 0. Okay, gap up. That's the problem with volatility, trading during volatility. Okay, it's hard to catch these things, but I'd be at +1 right now. Okay. Go back and test the MA200 again. Okay. Still a +1. Okay. And then over here on a break, if I confirm that break, I'll go to +2. There. That's the confirmation. Now I'm at a +2. Okay. And then this was, what was this? July 22nd. So let me just remove the replay and just go to July 22nd. Okay. And aren't we bullish now? Aren't we well into that bull trend? I'm at a +2. Right? I just went to a +2. And now I'm bullish. And at some point in time, I would have gone +3. Okay, so does that make sense? Was that a good exercise for you guys? You got to see my portfolio management throughout and visually. Like I don't have COVID memorized, right? So I don't know. That was a real walkthrough of my exact attitude based purely on the price action that I'm seeing. And then could you see that if that was what I did during, even though COVID was super volatile and super crazy, and a lot of people were super fearful, and people were wondering, is this the bottom? Are we going to get a V-shaped recovery? And blah, 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 blah. I don't care about any of that. All I care about is, based on what I'm seeing, am I a 5, 4, 3, 2, 1, 0, -1, -2, -3, -4, or -5? Which one of those am I? And you can see that by following that procedure, then I would have, or I did, but based on what the exercise that we just did right now, if that was what we were doing and that was what we were allocating, we would have very successfully navigated COVID and very profitably navigated COVID, right? Can you guys see that? I very rarely trade out of the money, Bob Blaine. So the positions that I had were a lot of verticals because of the volatility, and I really wanted to have very well-defined risk and reward. Otherwise, it's difficult to manage when you have a huge volatility like that. But also, I did have plenty of single calls and puts during that time period as well. And that way I can take advantage of huge outsized moves, right, with a limited amount of risk. Okay. I need your soothing voice when I trade. Thank you. Tim, yes, it's Steve Fazio, helpful things. Okay, good. Okay. So this is how I manage my trades in my portfolios. Number one, I have my trading plan for my individual trades, but I'm looking at my positions and adjusting based on what we have in the market. And like I said, right now I'm at +2 in the market. Okay. And then if you're having a mix of strategies, like we were talking about earlier, then I would only have either I would either have, depending on what's going on in the market, I have a mix of I would definitely have an income style going on. Okay. And then I would have a directional trade going on. And whether or not I have both a Gamma Pocket and a Quant X, most of the time I probably would. And just see what's giving me the opportunity that I like the most at the moment in time. But there are certain conditions in the markets where one of them might start underperforming and the other one might continue to perform. And if that's the case, then I'll just allocate towards the one that's still performing. They're not going to have the same equity curve all the time unless the market is just completely dominating what's happening. Just like during COVID, at least during the downturn, the market completely dominated anything else. It didn't matter what edge you were using. It didn't matter which system you're using. Everything was just going down. And you could have taken any signal out of anything for a downward move and it would have produced results. But that's not most of the time. And so even during a smooth upward movement like we've got right now, a lot of most programs will be performing right now. But what you'll see is, one might do this, and one might do this, okay, and one might do this, and one might do this. Okay, it's just when you get these dips, you start to see one go, then you just avoid that one for a little while. You would avoid this system during this period for a little while. Okay, and then you still take paper trades and pseudo trades so you can track when it starts to perform back again. And during this period, if I have this system, during the same period, I'm going to favor this system. I'm going to take more signals off of this system than I do off of this. Or I'm only going to take signals off of this and not this if I have a really small account. Okay, but I still paper trade these other ones just so I can track their performance and say, okay, well, they're all performing, or only this one's performing, or what I notice is the market maker hedging is doing a lot better than the projection. Okay, so that would have been the case during 2020. Hedging would have driven far more than their projections. No one knew what was going to happen during that time period. There were very poor projections during that time period. But I tell you what, they were hedging themselves like crazy during that time period, okay? So the shift would have been away from things like QuantX and more into the Gamma during the COVID period. Okay. John says, very helpful. Raj says, hi, Kay. Hey, Raj. Tim, I started Target today and it gapped up to 90. Because my stop loss was 90, I stuck with my plan and closed the trade. Good. Good for you. Let's see what happened with Target. Yeah, it closed at 88.96. So not quite 90. Is it because at what time did it hit 90? Oops. I hit 90 pretty early. So I would have waited at least to the last half hour before making that decision. Yeah, because if we take it into context, the last week in Target, all it's done is really just chop sideways. Yeah. But kudos for sticking to your plan. Yeah. Yeah. If your plan is at any point in time it crosses over, I'm stopping myself out, then perfect. GSAT keeps moving. Yes, indeed. We targeted a gamma pocket. I think it was at 40, and we hit that gamma pocket, and it kept on. So basically, we targeted this challenge. Okay, return to the resistance, and it broke out. So this is a breakout trade now. I wouldn't chase into this though. If you took the gamma pocket trade from before, and you got out when target hit at 40, then what you would do is you would just put this on a watch list and see if it pulls back to the breakout level and gives you a chance at a bounce. Okay, so that would be a pullback trade instead of the breakout trade. All right. Okay, we are a few minutes over our normal allotted time. I think that was a really good exercise to wrap up the portfolio management or the small portfolio construction. So if you have any questions, send me an email. I'll be more than happy to answer or to extend it one more lesson to get your questions in. Otherwise, have a wonderful rest of your day or night, and I will see you guys tomorrow. Okay. All right, bye guys. See you later.